One of the viewers on this channel, one of my pioneers, asked a good question in the comments of a previous video about how to go about getting the best mortgage rates, the best terms with the best fee structure or the lowest fee structure. I'm going to give you a handful of different tactics and strategies and sticking points that you need when you start to shop for a mortgage. I'm telling you right now, at the time of this recording, it's still one of the best times, if not the best time in U.S. history to get in on housing, residential housing. And I want to get you the most advantageous mortgage position possible, because that's where a lot of your money, your value is going to come from, is having a really, really quality but low cost mortgage, or as close as possible. So the first thing we're going to say right out of the gate is you're going to need to have very stable employment. What that means is basically you're going to want to be at minimum in the same industry for at least about 2 years, ideally at the same employer for about 2 years. Outside of that, if you find yourself hopping around, at least make sure you're going from like 1099 or something like that, if that's where you are, to W-2. Just keep in mind that W-2 income is supreme when it comes to employment, when it comes to mortgages and any lending, to be honest. The next thing you're going to want to focus on is making sure that you have a great DTI, debt to income ratio. This is going to be the spread between what you gross every month and what you have to pay out, what's reported on your credit report. So think, student loans, credit card debt, auto loans, things of that nature, anything that reports on it. So it's not going to be like your miscellaneous cell phone bill unless you report that, on your credit, your grocery bills. We're just talking about things that are reported on your credit report. The next thing you're going to want to focus on is making sure that you have a quality credit score and a quality credit profile. Quality credit score at the very peak right now, a 760 is the best that you're going to get as far as mortgage rates. 760 middle FICO score and up is going to get you the best mortgage rates in most cases. That means out of the 3 FICO scores you have, your middle score is a 760. You're going to want to make sure your credit profile is also polished for this transaction. That means that you need to have enough trade lines on your credit report. These mortgage lenders are going to be lending you the most money at one time most of you are ever going to see. And if they're going to look on your credit report and only see a couple credit cards or 1 auto loan or 2 student loans in a credit card, you need to have at least a few trade lines. The more you have, the lower risk you are. So, think 10, 15, 20 different trade lines that all have some age to them. But if at the ground floor, at least make sure you have around 3 or 4. For most mortgages, when it comes to FHA and conventional, you need to have at least a few trade lines that are at least, 1 to 2 years old at the ground minimum to at least qualify and get in the door. The next thing you're going to want to focus on after you get your employment together, you get your DTI together, you get your credit score, credit profile together, you're going to want to make sure you have really solid cash reserves. I am not always the biggest proponent for major down payments on properties, because a lot of times that cash could be going to do something else a lot more productive than getting locked away in your property and equity and only able to come out if you sell a property or if you finance it back into debt. But that having been said, at least having the cash to show that you have the financial stability and prudence, to back yourself up, 6 months, a year's worth of mortgage payments, or you could have put down a lot of money, is enough security for a lender to see it and say, okay, great, we're only requesting 2, 3, 5, 10% down, whatever for this particular loan. This person did have 10, 15, 20% they could have put down. So have great cash reserves. The next thing you're going to want to focus on is one that doesn't get a lot of attention and is becoming a lot more of a trend nowadays. And that's going to be geolocation, geo-incentivized locations, picking locations that banks and lenders are trying to incentivize people to move to. There are many parts around the country in your local area and, in your metropolitan area and the outskirts, typically going to be areas they consider minority areas or, just areas of development that they're looking to expand on. They're going to be local and sometimes even national banks and institutions that will literally, grant you money or, lower the requirements to get in on those properties because you're moving in that area. It's a really, really good hack strategy, if you will, that can get you, additional $2,500, $5,000 in closing costs because of a grant, or it can get you zero down, if you're cash strapped or just don't want to put your cash up, and still get a really good interest rate. So make sure that you're doing your homework on parts of your metropolitan or area of interest where you're going to be able to take advantage of lender incentivized locations. The next thing you're going to want to focus on, once you get that all lined up and situated, you're going to want to make sure that you have a loan type picked out based on where you want to buy. So, a USDA loan is not going to work in the middle of a metropolitan city. A FHA loan might not work that great in the outskirts. You have to do your research and find out where you want to live. And then once you do that research, from there, you can determine which loan type is going to work for you. And of course, work with a loan officer. You can even comment down below to be honest, and I can help you get an idea of what loan may make sense. Loan types. Most mortgage loan brokers and lenders are going to run you across multiple programs anyway, but you want to have some idea of what you're looking for. If you're a veteran, there's obviously the VA should be a top of mind. If you're looking to the outskirts of a city, which is 90+% of America at the moment, a USDA loan could be a great loan. Just do your homework based on that same GU incentivized location, loans that'll complement the area you're trying to move into. Best rate, best terms, lowest fees. Next thing you're going to want to focus on once you get past that, you're going to want to make sure that you have strong relationships with at least a couple to a few different lenders. If you check off many of the boxes that I set for you in the beginning, most of those boxes, even if you're brand new, you'll go into a lender and they will work very hard and compete for your business. That's exactly what you're looking for. But it does help to have an existing relationship with them in the process. So do your best to go in advance and have, checking and saving set up at a couple different institutions, or at least some lump sums of money set up. That's going to help you, look more enticing and more secure and less unfamiliar to the lenders. And that goes a long way. The last thing you're going to want to focus on is, once you have these different relationships set up, is making sure that these entities compete with each other. You have about 14 days from your first hard pull for a mortgage to shop around freely, no matter how many inquiries, and the credit bureaus and the algorithms will identify that pretty much all as one set of inquiries and shopping. They're not going to, allow it to beat up on your credit score. So take advantage of that. Make sure you're shopping around, if you can, at least 3. But, if you can pull off 5 or more, or whatever the case may be, just to make sure, then make sure you're shopping around and making these different institutions compete, and bring back what you get, the loan estimates from, this lender to that one, and make them fight for the best interest rates and lower their fees. Trust me, they'll compete. I know firsthand. I do this for a living, and I also I bought property, buying property. So I'm telling you right now that if you can get one that's a 1/4 or 0.5% down and a point less, bring that to the other lender and make them go back and forth. Most of them will compete, and you can drive down the price of your loan doing that. Other than that, lock your rate in. Right now, especially, lock your rate in when the time is good. The property that I'm closed at the time of this video, by the time it comes out, I'll be closed on. In my situation, it fluctuated almost a full percentage point at the time. Literally almost 0.75, 75 basis points on my mortgage rate fluctuated. I had to catch it just right and lock, while also making the institution I lock with compete with another institution that was offering some pretty good rates at the time. So make sure you're playing the game of making these institutions compete and balancing for a rate lock. You do not want to miss time and get stuck with a 0.5% or a 75 basis point jump just because you had bad timing. So do your best. It's not, you don't have a crystal ball, but do your best with a rate lock. But other than that, if you can follow that little, recipe when it comes to mortgages, I can almost assure you that you're going to get a really high quality loan from your various, whoever you lock in with. This is the kind of positioning that you need to be in. And this is what's going to make the difference in the tremendous growth that's likely coming in the next couple years when it comes to, residential property and real estate. If you have any questions, I want you to comment down below. Let me know, if you need me to clarify or dive deep on any one of the bullet points that I brought up. And let me know, is it your first time buying property? Has it been a while since you bought a property? Right now, the mortgage, the cost of that mortgage, the interest rate is as important as anything right now. If you can swim upstream right now and get your hands on a property, and while everything is downward pressure, meaning that interest rates are high in a lot of parts of the country, insurance is abnormally high, if you could do it now, when these things resolve themselves, then with the supply and demand economics, I can tell you right now that residential real estate in most of the country is going to take off. It's going to be the juice will be worth the squeeze. Comment down below and let me know if you have any questions. To all my pioneers, welcome back. To my new viewers, welcome in. Want to learn more about myself and the channel? Start in the description section, work your way to the about section on the channel. Of course, subscribe, like, comment, share with anybody you believe can get value from it, because I know there's people out there who can. Other than that, I want y'all to stay focused. Stay in motion. I'll see y'all soon. This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.